What's up, guys? My name is Ryan. I trade ETFs, and I like to make videos of the technical analysis that I'm seeing in the charts. So we've got FAS for the financial sector 3x shares ETF here, and so let's get started. I actually, this financial sector was a recent addition last week in my video series here because I started to see some interesting new patterns play out in it. For the last a couple months, we've just been stuck inside a $3 range, and for me, in the 3x ETFs, that's not all that interesting. However, with the advent of this third bottom here, I started to question whether or not this was a triple bottom, and I'm actually had a pretty nice trade that's going on right here, and I had my maximum move here, if you were playing it, to the book, was 8.36%. I didn't play it by the book. I bought it here at the triple bottom or just slightly above it around here, so I'm sitting pretty right now. However, I think that we're starting to see some potential sector rotation here out of your biotech, out of your semiconductors, out of your technology, and some of it's going back into financial sector. But here, I'd like to explain what I'm seeing here in the chart in price action. So we can see that we had the completion of an Elliott wave here, right here, marking our fifth wave, and it did respond to that by falling back down. Now, if you were trading strictly Elliott wave, potentially you could say that this is your A, B, C, and we're due to continue higher. However, I guess I see a little bit more to the picture than this right here. I see a head and shoulders that I think everybody saw and was betting bearishly on the financial sector. However, I guess I always like to play the contrarian view and look at the whole picture and in a little bit more detail. And I guess the reason I'm spending more time in the introduction here for this one is I called this pretty well last week in my video. And if you watch it, we were sitting at about right here, and I said that, there's a likelihood that we could fall back down further, and that would be a good entry point, and we would move higher. This would be a good entry point because on lower time frames, this would look like a head and shoulders bottom. And also, if you're into fractals, which I do look at from time to time, starting over here, you can see that we have this similar pattern take place where we have, these big drops down into this, and then we have a run up, but this run up was rejected and falls back down, and then we moved higher. And this kind of exact same pattern looks like this pattern over here on the left. So as far as divergences go that I see here, I see one right here where price makes a lower low as our slow stochastic makes a higher low, and this is a bullish divergence. It probably led to the rise in price right here and not the overall pattern. I see a second one right here, which may have contributed to the run up right here, but our stochastic makes a higher high right here as price makes a lower high, and this is a second divergence that I saw here. When I'm talking about the triple bottom, I mark this out by the three rounded, little scoop patterns that I have drawn here, and this is what I'm referring to when I talk about the triple bottom. On different time frames, this could be chalked up to what would look like a descending triangle. We've got an A, B, C, D, and then we didn't set our E before breaking out. However, this kind of looked like a descending triangle to me, and so I marked it down. This level right here is the 100% fib level. This is 127% fib level. This is the 141, and up here is the 162.8 fib level. 162.8 fib level is my exit point and where I'll be exiting the financial 3x ETF. Another reason I'll be exiting it is because it is a measured move here. This support line to this resistance line marked green. This green line was our original neckline that I had drawn. A break above this would be a bullish move, and that would be if you're playing it by the book. So I drew a clone from the support here to the resistance, and then I cloned it and dragged it over here to the point of breakout, and we can see that it comes up here and hits our 162.8% fib level very nicely. Let's go ahead and drag this back down here. And as far as the textbook definition of what to look for a triple bottom, we see that volume trends downward 67% of the time. This blue arrow marks how volume has trended downward. It should be downward price leading into the pattern, but should not drop below the prior bottom. We can see this is the prior bottom. We did not drop below it. The breakout target is where the breakdown began. Our breakdown began up here, which is pretty close to our target price. Look for a tall left side with few to no price consolidation zones. I would say that there is one consolidation zone here and then a straight shot down. There's better performance if the triple bottom occurs during a large flat base. I can see that this is, like I said at the beginning, price has been bouncing around for several months in a $3 range, which is, very small for a 3 times leveraged ETF. A triple bottom can appear as the corrective phase from a measured move up, and if this is the case, the breakout may be less than expected. And I'll explain why this is in a couple bullet points, but you want less than a 3-month decline into the pattern works best. Right here we have at the start of March and the bottom coming in here at around April, so it's a 1-month decline, so this would work here. If the triple bottom appears after a peak, the breakout move is likely to stall at that peak. Another reason why I'm selling out before the peak, in order to capture the bulk of that move here. And this goes back into triple bottoms can appear as the corrective phase from a measured move up. The breakout may be less than expected. It makes sense that people would take profits here at the peak again because this peak served as a hard resistance point in previous sessions. And there's better performance if the last valley bottom is above the second valley bottom. This is not the case for this, so we would not check it off. The second valley bottom would be right here, and I think that price comes down and sets an equal bottom right here. What it might be referring to is if this is the second valley bottom, this would be a higher valley bottom right here, and this would be bullish, and we can most definitely see that it was. So this was my analysis basically from last week. I haven't done much with the chart. I'm just letting the price action play out, and I don't have to modify my chart all that much at this point because price is playing out pretty much exactly how I expected it to. We can see here at the 127.2% fib line, we got rejected once, twice, and then we finally had the energy to break through, and we concluded the week here at the 141.4% fib resistance level. You can see our wick got a little bit above it here, but the bar has yet to move out above that. So I'll be watching financial sector closely next week. All right, this was my analysis on FAS, and I hope you enjoyed it. Thanks. Bye.